Hey there, welcome to SSP Monday, November 20th, 2023. How you doing? Hope you're doing great. All right, lots to cover today. Let's dive in. Let me share my screen. Okay, so interesting. Warren Buffett, as many of you know, he is referred to as the grandfather of value investing. And he usually is looking for, amazing companies to buy shares of. Just announced last week he's unloading 7 of his stocks, including General Motors. So unloaded its entire position in 7 stocks: GM, Celanese, I don't know what that is, UPS, in the third quarter. So often people ask me, what's a good value stock? And Berkshire Hathaway is his less expensive share. There, he's got like Berkshire Hathaway Class A, which trades for several $100,000, and then he spun off a Class B share. I think it's been about. Has it been about 30 years, 35 years? It was right around the time I first started in the equity markets. And, his management style is pretty conservative. So he tends to, like it says here, Berkshire Hathaway's are up, shares are up 15.5% this year, trailing the S&P. The S&P 500 is up 17.8, with dividends reinvested at more than 18% is the return on the S&P 500. But in down years, I think that's where he really shines, because he doesn't seem to have, his shares don't lose as much value. So just interesting. Just wanted to show you, what's going on there. Locking in S&P 500 gains. Not just losers are getting sold. It locked in gains. So it looks like a chemical maker, Celanese. Shares are up 25%. Let's see. He is hanging on to all of his 107 million shares of NU Holdings, which are up more than 92% for the year. He retained 93.7 million shares of Paramount Global. Shares are down 26% this year. Sold Berkshire Hathaway position 100% sold in the third quarter. So we got General Motors, UPS, Johnson & Johnson, Procter & Gamble, Mondelez International, Activision Blizzard, that got acquired by Microsoft. So yeah, just interesting. And notice these are pretty much all across the board, aren't they? You got General Motors, car company, UPS, shipping, industrials, healthcare, consumer staples, material stock. So yeah, just something to take notice of. And we want to thank all of you for reaching out. We were recently given credit for our winning the software award for best financial services company. Very proud of that. And second year in a row for software as a service company in the financial services sector. So we're super excited about that. I think I already posted the link to the article on here, but you're welcome to, I'll post it and welcome to read it. Please share it. We would love to have you share we feel, we do this for you all subscribers. We feel very passionate about what we're doing, and please let's help get the word out. Okay, another headline that caught my eye: Citigroup begins layoffs as Wall Street braces for a rough end to 2023. They are laying off higher level executives. Senior managers are part of this sweeping reorganization for the company. They announced it 2 months ago, so it'll happen here shortly. The cuts amount to roughly 10% of their senior manager roles, approximately 300 managers. They employ currently 240,000 people. So they said, today we shared with our colleagues the next layer of changes across many of our businesses and functions as we continue to align Citi's organizational structure with their new simplified look at this, what they're saying, new simplified operating model. Of course, they haven't said what that simplified operating model is, but nevertheless, it's going to require cuts. Reorganize the firm involves some difficult, consequential decisions, but we believe they are the right steps. Jane Fraser, CEO of Citigroup. Citigroup was the last firm I worked for. In 2000, I got out of the industry, got out of the business then, back in 2000. And at that point, they were a phenomenal company to work with. They punctuated a tough year of Wall Street and the rest of the banking industry. So I wanted to show you, this is what they're referring to. Investment banking. Investment banking is where they make the lion's share of their profits, right? Charge big bucks to get deals done. And we've got this comparison between the third quarter of the last few years. So 21 in sort of this reddish color, watermelon color 2022, and this orangey color 2023. So this is with Citi. Even though their numbers outpaced what they did last year, third quarter of last year, still quite short of the third quarter 2021. But regardless, they are one of the lower end on the deal makers, right? You've got JP Morgan outpacing them by nearly $1 billion. Bank of America, Morgan Stanley is probably similar to Citi, but still doing more deals. 2.4 billion a few years ago, 0.94 billion third quarter. And Goldman, one of the leaders in acquisition. Goldman and JP Morgan look like they're leading the pack here with acquisitions. And but there's been a slowdown. So due to the slowdown, they're having to restructure. You know, this is really the time when companies restructure their balance sheets, save money, and if things turn around, then their numbers look even better, right? Because they've gone through some cost cutting. So just something to be aware of. I want to talk about this Japanese deal here. These are the countries that own U.S. foreign-owned debt as of January 2023. Japan is the highest at 1.1 trillion. China behind them, just behind them, and the UK behind China. So owning 1.1 trillion. So, you know, there's been a lot of talk about the Japanese bond market collapsing, and this is what's going on. I want to bring this up, bring this to light right here. So on October 23rd, Japan raised the de facto cap on the yield to 1% from 0.5. So what happened was, for the last decade, Japan has had a negative interest rate environment where they have literally have been in the minus territory for interest rates. And because of that, they were able to set the 10-year bond rate at 0.5%. Well, they finally took that yield up from 0.5 to 1%. Now, a lot of people speculate that that's actually a good thing, because the Bank of Japan, BOJ, can start to earn more money through their depositors, through issuing bonds, than they have in the past 10 years. But the speculation was, with the Japanese yen declining, that they may not be able to pay the interest payments on the U.S. Treasury bonds that they're buying. So that's the big deal right now. So they own, as this says here, 1,104,400,000,000 in U.S. debt, Japan. So they're working on, figuring out how do they afford uh, the payments, the repayments on these short-term bonds. The nice thing is the U.S., see, because they're the buyers of these bonds, they receive the coupon payments. And that could be annually or every 6 months. And with the U.S. dollar higher than the Japanese yen, they're making out quite well on the spread. So the challenge comes when Japan, when these bonds come due, they have to make sure that they have the capital available, that they can afford to maintain and keep these bonds on their balance sheet. So I've always said that a rising interest rate market, like, you've heard me joke, friends don't let friends buy bonds. Well, Japan took it on their own to buy all these treasuries and T-bills, short-term treasuries, and the longer-term treasury notes and treasury bonds are very long-term debt. And there's just some speculation that maybe they have to sell some of these bonds at a loss on their balance sheet. And because interest rates are going up, these bonds are losing value. So this becomes, if we relate this personally to your investment portfolio, I've always said, stay away from bonds, right? There's nothing good about them other than for the issuer, the country, the company, the municipality who issues these bonds. It's great for them because they get to tie up your money, do whatever they want with it, and then pay you a little bit, dribs and drabs along the way. So, just dividend-paying stocks are one of the better investments that you can make if you're looking for fixed income, if you're looking for, some type of return on your money. I highly recommend dividend-paying stocks. Okay, hopefully that was helpful. I just wanted to talk about how that yield curve works. Yes, they did increase the rates, but they were at, look at this, 0.5% on the 10-year. I mean, let's compare that to where we are with our 10-year. In the U.S., our 10-year bond or rates are at, here we go, 4.43%. So we still have an inverted yield curve. Our short-term rates are still higher than our long-term rates. At some point, let's hope that flattens out and normalizes where short-term rates are lower and long-term rates are higher. We'll see. That's why it's really important to watch this metric here, this 10-year bond. But let me talk about one of the winning stocks for the week is a stock that I highly recommend, and I'll tell you why, Palantir Technologies. This company trades at $21.48. Currently, it is high risk, so make sure that you can afford to take risk if you're interested in buying a stock like this. And I'll show you why I like it. I mean, literally, look at first of all, their growth rate is fantastic. 17% year over year based on the quarterly earnings, which is actually decent. But here's the real reason I like this company. They literally print money. Like, look at this stuff. Here, let's go to the financials. And look at their profit margin, 6.93%. Operating margin, 7.16%. Totally profitable. Return on assets, $2.13 billion. Return on equity is a 1. Revenue growth year over year, 16.8. Gross profit, $1.5 billion. Total cash, here's why. Look at this, $3.28 billion in cash. Total debt, $236 million. So at any point, they could easily pay off all that debt. So there's no worry about dipping into anything or borrowing additional funds to pay off debt. Like, they've got it in cash, right? It's just quite extraordinary. And let's go back to the chart. Chart looks great. They did started out a year ago at $7, moved sideways for six months from November of last year until May 5th of this year. And then we started to see. So this formed a base here. So, you've heard me talk about it before. When a stock moves sideways, it'll move 5 to 10 times off that base. clearly, y'all, at 5 times, we're looking at a $35 to $70 stock, sitting at 21.48 today. All systems go. We've got the price green above red, stock price above all of the averages. MFI is slightly high at 71, but that's just a recent situation. I still think it's got room to go. So that's my stock pick of the week. I hope you continue to recommend us to your friends and family. We appreciate all of you, everything that you do to assist us. Thank you where are you? There you go. Thank you so much for your support. Super proud of our team to win this award again for this year, 2023. We've got lots more coming for you. So we'll talk soon. Thanks, everyone. Have a great week. Oh, and happy Thanksgiving to those in the U.S. who celebrate. We are grateful for you, and we wish you an amazing holiday with friends and family. All our best. Thank you.